Yo, 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 what's going on? Good morning, everybody. What's going on in the hood? Haha. My friends, my people, Clarence, what's going on? How's everybody doing? Damien, what's going on? Miss Priceman, what's going on? Where everybody at? Where the goodies at? Mr. Bradley, pleasure as always. Good morning. How's your day yesterday? Sweet. Give me 1 second here. I got to fluff up some cafe. Man, it's a beautiful day in the neighborhood. Man, it's like 75 degrees for December. That ain't so bad. That's a good weather. Haha. Hey, Johnny, how you doing, Sal? What's going on? All right, guys, let's get to work, man. It's 9:01. It's showtime. It's game time. It's money time. Corey, how you doing? Good. It's good to see everybody. We got a lot of things to do. So, guys, let's get to work, and then we'll chit-chat after. If anybody is just brand new to the big show, what we usually like to do is spend this next 30 minutes getting ready for the markets. We'll take a look at market indexes. Then we'll take a look at all the different earnings and PR plays that are out there. Then from there, we'll go into our regular stock list. And then 9:30 bell rings. That's when it's showtime. I do trade very, very fast. As well, you probably know, all day traders trade extremely fast. This is a game of muscle memory, reflexes, pattern recognition, and then just going out and shredding. But I'll be walking you guys through everything that we need to do. Prognish, what's up? Prognition, motherfucker. What's going on? All right, let's get started. First thing you always want to do in the morning is what? We want to take a look at the QQQs. Why you want to look at the QQQs? We mostly trade tech stocks. Those are the hottest movers in the market. When you have, like, say, a watch list of 20 names, you always want to go tech and biotech first. Like, if all things are equal, tech and biotech tend to be the biggest movers or the easiest movers. You are starting to see a pre-market spike. So you can see here that the market faded off pretty much all day yesterday. You saw volatility rising, the QQQs really dumping most of the day. It was actually a trend day. Now, we had gapped down, and this is actually pretty interesting. So we had gapped down, and it looked like things were just going to get super nasty. But lo and behold, the market is actually, it looks like there's some news out over here, and we're starting to push off. What's running this market right now is just like a tariff this, tariff that, nothing beyond that. So we're just in this kind of tariff news cycle. December 15th, I believe, is like when the first round of tariffs comes in, and most likely they'll just delay it. This is like a kind of a delay tactics game that's been going on for a long time. I wouldn't expect anything else. So we're going to get a lot of herky-jerky here, as you can already tell by the pre-market action. In pre-market, when you start getting like moves like this, where you gap down and then you push up, and you're already like just ripping, dipping this way, what you got to be mindful of is that that means it's going to be a little bit of a wild trading day. And a measure of volatility, right, is you can use TVIX. This is a 3x ETF for volatility. And so when this thing starts to move around, you can see yesterday this was at 63, got to 64, even in the pre-market, dumped down to 68. So what that's telling you, when it's moving around like that there's a lot of volatility in the air. As day traders, what do we love? We love action. We love volatility. I mean, we're frankly, right? I mean, that's what we like to do. But volatility can lead to emotional trading. You know, a lot of times, like, we're trained, like, we love volatility. We want to see the volatility. But frankly, a lot of volatility, it kind of makes you do stupid stuff, right? Because you think, like, this is the day I'm going to get rich. You know, a nice, slow, easy, grinding market. It doesn't seem very sexy, but those are usually the best days. So when I see this TVIX moving up and down like this, what I usually do is I got to cut my position size just a tad, because the volatility will pay us, and we don't want to be oversized. Otherwise, you'll really lose. So our game plan for today, this market's gone red to green. We're still right near highs. We've got to play for the breakout still, I think, in the general market, but we have to be prepared to kind of flip if we need to. So what we'll do is keep TVIX on our watch list. In case the market rolls back over, we'll long some volatility. Now let's take a look at some of these earnings plays. There's actually quite a few. Yesterday was dead. Manic Monday was dead for earnings plays. Today it looks like there's quite a few. So this is, right, trade ideas, up gappers, down gappers. This is going to tell you, like, okay, what are the earnings, when they come out, what's the company do, what's the float, all that kind of fun stuff. This is something that you want to run every day at 9 o'clock. Now, we want to start flipping through these to see, like, which are the hot earnings plays. Why we want to do this, especially on a day today. So today, as we talked about, the market's moving up and down all around. When you have stocks that have earnings out, they're going to move independently to what's happening in the market because they actually have a fundamental event out. So we're technical traders, but guess what? Fundamental news still drives stocks. Earnings is still the long-term driver of stocks. So we always want to be trading earnings plays, post-earnings, never before. And the reason for that is that these are the plays that move independent to the market. They have their own order flow, their own organic volume that comes in due to the fresh news out. So when you trade earnings plays, post-earnings, what you're doing is marrying the fundamental with the technical. And now it's like that perfect storm of awesomeness. When you see stocks that go up like 10, 15, 20% in a day, that's not because of like you drew like some horizontal squiggly line on a stock and like it just went up 15%, right? Could you imagine? Like, yeah, hey, I drew this little squiggly line on a stock. Now I'm shredding. Right? This happens to come in straight from usually earnings. You guys got to always be looking for gappers in the morning. If you don't have trade ideas or anything like that, that's totally fine. I would just use the market chameleon. You can cruise in and do all that kind of fun stuff too. So let me find this bad boy. You can use this. That'll give you a good list. So SFIX, this is actually an interesting mover. So you get, first of all, number one, you have earnings that's come out. SFIX breaks even, first quarter, blah, 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 growth, surge, blah, blah, blah. And now you're getting a series of upgrades. Usually, you know what? If you can get earnings out and then you get like, say, 2 or 3 upgrades come into a stock, man, you can like really shred. These things start to push high. We don't know like what it's going to do. We've got a nice easy level here at pre-market at 28.50. So what we want to be doing is looking for, if this thing, because you can see here the float's a little bit lower, even the number of outstanding shares is lower. The lower the float, the more explosive it can be, right? Float is essentially the number of outstanding shares that can be traded on the open market that are available to be traded. So the lower the float, the more explosive it can be. Why? There's a limited amount of supply. Any kind of buying thrusts it up. So when you get something like this, if you get an ORB pattern, if you get an ORB pattern start to cruise up over here, that's when we want to look at this thing. If it pops up too hard at the open, then we've got to wait for a quick pullback buy, right? 9 EMA or 20 EMA, curls for the girls to the upside. If you guys aren't familiar with the patterns yet, just let me know. I'll make sure to kind of boost in some videos at some point on that. But those are our 2 primary patterns that we like to trade at the open. They're the simplest ones, but they're the most effective. The key is you got to wait for them versus jumping in. So let's add this SFIX to the list. I like this one. Let me get rid of all this junk from yesterday. Cool. So we like SFIX. What else is going on? Look at this OBSV. So this is gapping up 16%, but see after this dump yesterday, nothing you can do with this thing. Like, what are you going to do with this thing? It already dumped. So this is a dead cat bounce. Well, we call this a sucker's bounce, a retail trader's bounce. You get the gap up like this, and everybody's like, oh my gosh, like it's got 1 million shares volume, it's up 16%, maybe it goes. After this dump yesterday, this is the dead cat, it's the sucker's bounce. So you got to leave that one alone. LMPX. Ooh, so this is an IPO stock that's like just been shredding. So it opened at 5, cruising at 11. Automotive. It looks a little bit thin in the profile. I'd probably stay away from that. We need hotter. MDB, Mungo Bungo. Now this I like. Why? First of all, we've noticed, right, this kind of like $2 to $10 billion market cap has been our sweet spot recently. They've been giving the best range along with the liquidity. The second part of this is the software application sector has been really red hot all year. Like if you're looking at, if you're looking at sectors, right, and you do like, if you look at sectors and you want to add in, and you can add in any sector you want, but if you're looking in and you do like a 90-day sort or year-to-date sort, you'll see like these things are just loaded with tech stocks, and that's actually kind of cool. So like I always want to be just really mindful of, there it is. If you look at the year-to-date store, if you like sort through ETFs and you go to a year-to-date store, you start to see like this is tech, this is semis, tech. All of these are mainly tech-related ETFs, and so you see a lot of these up 164%, 144, 106, 100, 85, 84, 84, 84, 84. And that's a hot market, by the way. Like if you stink at day trading, I mean, you could have really just kind of bought and hold this market and made a shred load this year. So always be mindful. Like if you're day trading, you got to have even results that are like 3 or 4 times what the market is doing. Otherwise, it's not really worth your time. This Mongo Bongo's in that sweet spot of sector. You're breaking over these MAs. If you look here, it's about 48.6 million share flow. So for a multi-billion-dollar company, that's still a pretty low flow. Now, so this is going to have some range. For a lot of you guys, because it's a $100 stock, you're going to say like, well, it's so expensive. Chris Shoesmith, all right? Doesn't matter. If you can only buy 100 shares of a $100 stock, and it moves around $3, $4, $5, can you have a good day? Sure. All the time. Sometimes like people don't want to trade something like a Tesla. Well, if you can only trade 50 shares of it, but that thing moves around $10, $15 a day, can you have a good day? Bet your ass you can. Of course you can. So don't worry about price. Worry about range. Range is more important than price. You trade $1 stocks, half the time they move around 5, 6 pennies throughout the day, but you look at the percentage gain and it'll be like 7%, 8%. But then if you look at the range, it's just a few pennies. How are you going to really trade around that junk? You can't. So don't be, be mindful of all that. Like it's not a big deal. You see DTILs popping up 6%. This thing had the mega MPC candle yesterday. MPC candle is just it's an MPC, nasty MPC. Now you get a dead cat bounce in this. You can't trust this either, right? It went from 24 to 10. Man, that's too much. That is too much. So we got to just cruise along. Leave that alone. Brugnish, what you watching, buddy? Leave that alone. SPGL, junk, AutoZone. So there's like a sweet spot in price, though. Like once you start getting into like the $1,000 tickers, they have too much spread, so it becomes really hard to trade. So I usually leave those alone. Junk. So like when you see these kind of small caps over here, like why I say junk. So when we're doing earnings plays or gappers, what you really want to do is like, you want to look for plays that are, frankly like 3% or more on kind of like 50,000 volume or more. But if you're like trading a small cap like one of these things, like say this thing moves up, like Rikita moves up, 4% on, it moves up 4% in the pre-market on 16,000 volume. That doesn't usually mean anything. Most of the time what that means is there's like some asshole who's running a chat room who trades small caps who bought 16,000 shares. He's about to pump it to his, unsuspecting subscribers. Usually if you trade a small cap stock, like you want to see 1 million shares, close to 1 million shares. If it's a little bit higher price, you could do 500,000, 600,000, but you're coming out. Mr. Mike, I think, guys, is the audio okay? Somebody mentioned I sound like a duck. Looks like a duck, quacks like a duck. The audio okay? Okay. Hey, Mike, you may just want to shut this thing down. Yeah, I would just kind of, yeah, take it down. Just restart it. Cool. All right. We'll get it. We'll get it going. So let's cruise in. Junk. All right. Junk, shop. Let's go on the downside. So you're starting to see you're seeing a lot more on the downside today. So Con is sadly like a retail stock, so it's not going to be like that hot. But, but you've got yourself a break of these lows right here. If this thing stays under 1540, like this thing could get shredded. My one worry on this one, so when you're looking at gappers, like stocks that are having bad earnings, right? We want them to clear levels. We want them to clear levels ideally. So if you look here and you go back on even say like a weekly chart, you've got yourself like 1580, 1570s, that low, that hold spot. So when that happens, as long as it can stay below and you start to build out a pattern under that level, that's when you guys will have, that's when you guys will have a little bit of fun. This is prime time for us. The issue on this one is going to be that it's down a lot already, 26.6%. When stock is down 26.6% in the pre-market, the SSR is going to be on. If the SSR is on, you can't short it on the bid. So what you got to do is just be like super mindful. You're not going to be able to short it on the bid at all. So you got to wait for like a slight uptick. Just a slight uptick, and then you can go with it. Yes, Sumit, you can have the scans here. They're, I got a million parameters on all these things, but you can hit that link and download them all in. Cool. I like this one. Especially like right off at the bat. If you see this thing cruising up, at like, you see this thing start to ORB like near 1450, man, we could take this bad boy downtown. You know what I mean? Oh yeah. Cool. Faux show. Good. All right, so I like this one. This is top of the list, along with SFIX. SFIX already faded back a little bit, so that's going to make it a little bit more tricky. Fran. Woo, dirty Fran. Okay, so let's look at Fran. Fran's got polls narrowed and Q3 loss. Revenue increases slightly. Search launch for CEO. So the CEO's getting fired. Never a good sign. You're kind of in this weird... See, this is not as clean as Con. What do you notice about these two? Fran, like it's gapping down in earnings, but it's coming into all this congestion, so it's not going to move as clean. That makes it just a little bit... That makes it a little bit more tricky, What we need to do is like let this thing kind of work its way down, but you can see Con is just a lot cleaner. It's going to be a lot cleaner as long as it stays under this. So when you have like a stock like Fran that's gapping down on bad earnings, but it's coming into like more of a congestion zone, that becomes a lot trickier type of stock to trade. So we'll put this on our watch list, but that's not a priority. So we want to always grade our trades, right? Like grade our potential setups. What's an A, a B, and a C? So if something is like not clean on the gapper, you got to be careful. It's not a priority. It might be something we watch in case it starts to whittle down and break through those levels. But we don't want to make this like, okay, this is our main focus. DBI. Woo! Update. Misses earnings. Ooh, never good. Lowers earnings view. Never good. Guys, anything, the word shortfall, miss, guides lower, lowers anything, never a good sign. This is also an apparel store. A lot of these apparel stores have been getting smoked. You can see the old low here is at 1423. I think this one is going to have a shot too. Let's let's keep this thing on the list. DBI, add that in. I would give this a B. Even though it's breaking these lows, I give it a B for one reason. I've been doing this my whole adult life. I never even heard of this company. And we've traded in this chat room almost everything. Most of you guys have been with me for years. We never traded this one. I can't even remember the last time we run out of stock that we haven't traded that's like, been around for a while. So that's my one worry. Most stocks, like I know them. I see how they move. I see how they interact. I can guide you through like, okay, this one's going to have a spread. It's not going to have a spread. It's going to move like this. This one will be a little bit more tricky. So we just got to be a little bit careful with it. Good, 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 good. I for a swing, let me look here, brother. Man, I is tricky. Like if it closes over the 9 EMA, yes. Anything under that 9 EMA, no. Good, good. So I'd probably pass on that one. Let's see, SPTN, Chung. No volume on this one, so we got to leave that alone. A little road beef. For you travelers, you know what that means. All right, road construction partners. Man. This one's tricky. I don't know if it's going to have any liquidity. Only 5,000 shares in volume right now. Pass. Let's see what else is going on. Hey, TC, isn't this yours, this seal? Ooh. LVGO. Oh, it's an offering. So see, when you see something like this, like LVGO plans a secondary offering, we want to go in with earnings plays. Earnings or PR plays. So earnings means like, right, hey, we made this much money or lost this much money, or some type of PR that says like, okay, we got a new contract, not got a new contract, these kind of things. If it's an offering, like healthcare company does an offering, all they're doing is just selling some shares on the open market. It'll reduce the price, but it typically kind of gets around the offering price. So we got to just be a little bit careful. TC, that's a lot of shares to seal. 100,000 shares? Good luck. Cool. Yeah, Canopy looks okay. So let's take a look here. Canopy would probably be a nice day 2 play for us. All right, the rest of this stuff looks like it's junk. Am I missing anything on the earnings plays, boys? Netflix. Let's take a look. Boom. Yeah, this might be okay. Like I wouldn't know. I don't think this is a priority unless it gets unless it rips a bunch of downgrades in a row. So when you have a stock that's getting boosted down, when you get a stock that's boosting down on a downgrade, like one, okay. If you get like 2, 3, 4, 5 downgrades in a row, that's usually when you get like a really nice shredder. Because that's when like everybody's shredding it. Like when you see like the Roku, like the day this thing collapsed, it started with 1 downgrade and then it got hit with like 3 of them, and then you saw this thing just get nailed off. VJ, both, my friend, both. Always everybody's looking at price, but we also base everything around patterns. All right, so the rest of this stuff is good. Man, let me look, Ryan. This AZO, like I said, this AZO is going to be nice. But like when you get into like these kind of $1,000 stocks, the spread on them can be big. Like I wouldn't be surprised to see the spread like $10 on this thing. So I usually stay away once you get into that price. Anything kind of like 300s and below, you're usually good. All right, so these are our earnings plays. Let's talk about day 2 plays. All right, let's talk about day 2 plays. So this is, I got 16, 16 on watch for day 2 play. So when we have this, these are going to be the top ones. Favorite for today, CGC. You already saw the dump down at the open. It's gone red to green. Now the other thing is on this particular name, we had a high here, which was right around 2150. If this thing busts loose over 2150 today, right at the open, it's good to go. It's good to go. Ideally, like it pushes up and ORBs, or it pushes up and does a pullback. If you guys have been trading CGC for a while, one thing you'll notice on this bad boy is that it doesn't work so well on strength. You got to hit it on like little mini dips. Otherwise, it just kind of fizzles out. It's a little bit of a thicker stock. Like if you ever trade like, what's that damn stock? Like AMD. It moves better than AMD by a lot. But it's thicker. Like it has a lot of volume. When you get a stock that does too much volume, so like this thing was at 20 million shares, it can move thick. There's a certain amount of volume you need, and then there's a certain amount of volume that makes stocks like really push. By some point, like if you do too much volume, then it gets too thick. So this is like, it can get a little bit thick here. When it gets thick and it thickens out like that, you want to be only hitting it on dips. Otherwise, it's going to be a big troublemaker. So besides these earnings plays, we want to go with this one. Make sense? Good. And guys, tell everybody in the chat room, say happy birthday to Zaman. It's his birthday. Say hi to, say guys, say hey. Make sure you say hey to Zaman for his birthday. Man, this thing is already shredding without us, so this one looks pretty good. Labu is another one that's looking pretty good. I think we got a nice trend on this one. Any kind of dip on this one, we want to take this thing down. And my main watch for today, I think, is going to be this Peloton. Any big dip on Peloton, we've got to come in and shred this thing. Man, it moves really nice. The only issue on this one is like it can, if it loses the VWAP or something, it'll dump down and pop back up. You're way better off hitting this thing on dips. Otherwise, it just doesn't move the same. All right, let's go. Let's have a little fun, guys. It's showtime. It's go time. Hey, YouTubers, guys, I have a free chat day in my Discord, so you guys are more than welcome to watch me trade all day. I'll be live all day, so you can come in and hang out. All right? Peace. Dun, 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 dun. You know what? It just cuts out sometimes, Marv. We get it going. Man, that Peloton commercial was nice, man. I don't know what anybody's talking about. I liked it.